So in this session, we're going to try and talk about what are the various career options that exist in finance, specifically after, somebody doing an MBA in finance, and how do you basically look at preparing for some of those. This may not be an exhaustive list of all the career options that are available, but we'll try and kind of cover a few of them, at least the major ones that are there, which are the more sought after ones that you would want to kind of look at. Before we go ahead any further, just a quick sort of update about FinShiksha, since some of us might be interacting for the first time. So we are a firm that specializes into financial services education. We have sort of e-learning courses that are kind of designed for somebody who's trying to build a career in finance. However, our endeavor is to try and be a little bit more than just pure play education providers. We help people sort of build their career. We try and basically help them work on their skill set in the process of learning the concepts around finance that are there. All our courses that we have been built keeping specific roles in mind, and consequently have projects that are available in that. We also work with a lot of corporate on the capital markets and banking side. Some of India's largest banks and broking firms and mutual funds are our clients in terms of training their workforce. And we run induction programs in a lot of companies in the financial services space as well for new joinees. So that's about us. I'll be your facilitator for the day. My name is Piyush, and I have about close to 17 years of experience in financial services. I have done an MBA and my engineering prior to that, and have also kind of in the process of my work completed my CFA. I have worked as an equity analyst and fund manager prior to starting FinShiksha. And over the course of the last, 10, 12 years have kind of trained participants across a bunch of organizations and top MBA schools as well. I'm available on LinkedIn. I think many of us might already be connected, but if you would like to and you're not as yet, you can find me there. Okay, quick disclaimer. If we talk about any companies or any sectors, that's not from a perspective of buying or selling those. So please don't read that as a recommendation to buy or sell any stock or sector, right? So let's turn our attention to the financial services industry and the components of that. We are going to primarily talk about the components which are mentioned here: investment banking, markets, equity research, credit research, and the components of private equity and venture capital broadly. These are the broad domains we will look at. I'll explain a little bit of how maybe India is different from some of these other sort of countries where you would have read about some of these data points, and how the roles are slightly differently organized in the context of India. So as we go along, we'll kind of take that. This should take about close to 40 minutes. And then at the end of it, we'll have a Q&A session, right? If you have anything that is in your mind as a question, please put it down in the chat box, and we'll take it as and when time permits. If something is relevant in between, I'll take that in between. Otherwise, towards the end, I'll try and take as many questions as possible, right? So that's the context. Let us first begin with the first domain, that is investment banking. So let's first talk about careers in investment banking. And what does it mean to build a career in investment banking? What is investment banking? What are the various segments within investment banking? What kind of skill sets might be needed if you are trying to build a career in investment banking, right? The term investment banking itself is sort of a very wide term. It's used differently in the context of what we read in India as compared to what's used globally. When you talk about global investment banks, they're like large banks that have a lot of host of services within what they're doing. In India, the term investment bank specifically applies to, more the boutique side of investment banking, which is specifically dealing with the transaction side of IB, which is, deals and, M&A and fundraising and fund deploying in that context, right? So the context of an investment bank, if you think about it broadly globally, in its purest form, an investment bank is something that is helping a client raise or deploy capital, either raise money or deploy money, right? In the global context, when you're raising capital or deploying capital, the banking domain comes under the investment banking work. So you'll hear about these large banks like the JP Morgans or Goldmans of HSBCs of the world. You will see their banking operations are a part of the overall operations that are there. And the entire thing is called sort of a bulge bracket investment bank, right? In India, you typically see investment banking as sort of a subset of overall banking, right? Because banks are the bigger entities in India. So I will break this component down in terms of its pure play form of roles that are available in India in investment banking. And we're not going to deal with the core banking aspect of things here. We're going to deal with more what investment banking works in India, right? So you can break it broadly down into two kind of roles. One is around transactions, the other is around markets, right? Transactions is basically raising and deploying capital in the form of, you're getting a fundraising in IPOs, you're getting debt funding for a particular client, you're getting M&A done. All of that is the transaction side of things, right? So if a company is coming with an IPO, you'll see an investment banker helping them out. If a company is buying a stake in another company, you'll see investment bankers helping out probably both the companies in that context. If you see a company raising debt, you could see an investment bank coming into the picture. If a company is basically looking to acquire a stake in another company, you'll see an investment bank coming into the picture, right? The market's role, on the other hand, is essentially dealing with actual direct investments and trades. All these investment banks typically run trading books, and you'll have bond portfolios, you'll have currencies exposures, you'll have equity exposure, you'll have commodity exposure. All of those segments on which you're trading and playing around on is going to come under the market segment. Right now, the market's role per se is more in line with what global investment banks provide. Indian investment banks don't necessarily give you a lot of markets kind of a role as such, right? So if you think about it, the broad context is helping a corporate raising or deploying capital, right? Not all investment banks will do all the services that are available. Based on what they do, you will classify them. A full service investment bank is something that will do everything. In fact, if you look at a bulge bracket, or what is the global large investment banks that you talk about, they would essentially also be providing banking, equity research, fund management. All of this would be coming under that one single umbrella, right? When you talk about IB specifically in the Indian context, you look at pure play transaction advisory services that are being given in terms of business transactions that are the buying and selling of stakes that are basically taking place for a particular company. So you'll have the bulge bracket IBs, which are the global ones. Then you have the mid-sized ones, which are typically sort of subsets or subsidiaries of large Indian banks. You'll see a lot of those basically coming into the picture. And then you will have a bunch of these boutique investment banks, which are specialized banks that have been created for the purpose of largely this transactions domain on this side, right? So you'll see the likes of, you've heard the names of Avendus or O3 Capital or Spark Capital or Allegro Capital, who would primarily be advisors in a lot of these M&A transactions that happen or fundraising transactions that happen. You keep reading about all these startups. So-and-so startup raised about $100 million. So-and-so company basically invested $100 million in another company. You'll usually find the name of a investment bank involved in those kind of transactions. That's the core sort of work that kind of happens, right? Banks also get broken down in terms of their activities based on front office, middle office, and back office. If you think about this segregation, it's usually a better segregation to look in the context of global investment banks, because they kind of help you sort of understand this better. Because let's say there's a global investment bank that is involved in the market segment in terms of the trading activity. So you will see a front office there. You will see a front office that is actually doing the trades is basically something that is going to be available. Then once you have put on the trades, your entire risk management piece comes in the middle office there, right? And then once you have seen this, then the sort of operational work of figuring out what is the sort of the entire operational stuff around that transaction, bookkeeping around that, that's the back office that comes into the picture. In fact, a lot of these global investment banks have middle and back offices running out of India, where they are providing these sort of compliance, risk management, and operational services that are getting out of these middle and back offices. In the fundraising space, you break down the global investment banks into another couple of areas, which would be equity capital markets and debt capital markets. If you're raising funds through shareholding, offering your shares to somebody, that's called equity capital markets, right? When you hear news about a Zomato raising money, that is basically in equity capital markets. If on the other hand, you're taking some kind of a loan, now you can take a loan from a bunch of banks, you can take a loan from a bank, you can take a loan by issuing what is commonly called as a bond to multiple bunch of investors. All of these are events that take place in something called as debt capital markets, in which case you're issuing debt, right? Of course, there's a difference between how you raise money through equity and debt. But that's basically the construct of how these again get broken down. Why is this segregation important? Is because some banks specialize more in equity capital markets, some banks specialize more in debt capital markets. So depending on a firm, you could basically go to one of these entities to get your fundraising requirements done. Right now, think about how does this work? Let's say there's a large corporate who's looking to raise money, right? The large corporate is looking to raise money in the form of, whatever avenues are available. The investment banker might come and suggest that, look, for this kind of a fundraising, is equity more suited or debt more suited? And consequently tap either the equity capital market or the debt capital market. Look at another activity. If there's a European firm that's trying to acquire a firm in India, right? Let's say in the healthcare space. Now, when you're trying to do this acquisition in the healthcare space, you may not know firms in India, right? So you will probably rely on the judgment of another intermediary, which would be an investment bank, who's going to tell you, okay, look, these are some of the firms that you could look at. These are some of the avenues of your investment that you would look at. How do you find those, right? So what is really needed in this entire range of things is, how does this business fall to an investment bank? The investment bank will have to go to this European company and tell them that, look, we are better equipped to help you out with this entire thing because we understand this industry. Therefore, the first and foremost requirement that comes up on the space is an understanding of the industry. Usually there are verticals created in various investment banks depending on sectors they are working with. So there'll be financial services, there'll be technology, there'll be media, there'll be healthcare, but your basic pitch to any corporate client who's making an acquisition or who's basically raising funds is that we understand your industry as well as anybody else, and hence we are better suited for you to raise money. So industry understanding, absolutely paramount as the first skill set that you will need, right? Then suppose a firm is acquiring another firm. You want to find out who is the firm that is likely to acquire and who's the firm that is likely a target. That's when you can approach the two of them for business. Otherwise, how would you know? You can't randomly shoot in the dark saying that, okay, let's go to everybody who comes our way and say, do you need funds? You want to look at firms that have funds, and you want to look at firms that need funds and be able to ascertain that. This is something that will come basis financial statement analysis skills. So your first skill that is relevant is the ability to analyze the industry. The second skill that is necessary is the ability to understand and analyze the company and its financial statements. I can't emphasize these two skill sets more in the context of the investment banking division. Then, of course, there is going to be a deal price. You're going to rely on your valuation judgment in terms of what do you think is the valuation. Various parameters work here, but usually, unless you're dealing with mature companies in this case, you are likely to basically see a smaller, reliance on large detailed valuation methodologies. You will primarily be relying on early stage valuations that typically come into picture. Having said that, an understanding on where a valuation concept applies, which sectors, what concepts do you apply, that becomes a very, very relevant component in terms of your valuation exercise, right? Then if you're in the markets division, you do need to understand about global markets, knowledge of various instruments, asset classes, equities, derivatives, bonds, currencies, all of that is important, right? So you need to know how does trading in these markets work? How do these markets work? Specifically, I think derivatives is something, if you're entering into an initial part of your MBA, then you may not come across this immediately. That's something you may have to kind of add as a skill set. Finally, remember, investment banking is a front-end role. In most cases, you will deal with talking with clients. So you will need good business development and negotiation skills as well. This is a front-end role, so you'll require those skills coming your way in terms of an overall understanding if you're looking at investment banking as a domain, right? Now, understand that this is one of the most coveted fields in financial services. There are a lot of people who are essentially eyeing these areas. There are a lot of people who are trying to get into these segments. It is important that you understand that the skills that we are talking about are practically non-negotiable. There are jobs available, but the number of people vying for those jobs is much larger. So it is imperative that you work on the skill set very, very closely. And when I say skill set, it's not just, we go and read about some ratios about financial statements. It is important that you are able to interpret numbers in a much more detailed manner, right? You're able to look at industry trends and make sense of what's going to happen with a particular industry in future. So that's something that is absolutely, critical if you're trying to build a career in investment banking, right? Let's move ahead to our discussion about equity research. Now, usually when you talk about bulge bracket investment banks like the Goldmans and HSBCs of the world, in equity research will be a part of that. In India's context, if you pick up a particular bank, you will talk more about the bank, and the bank will have an investment banking subsidiary. They will also probably have could have an equity research subsidiary. They could have a mutual fund that is a subsidiary. So there could be various entities that come up there. Equity research, as the name suggests, is the research of listed stocks, publicly listed equity, right? There are two segments in this, something called as buy side, something called as sell side. Now, the terms buy side and sell side are usually misnomers. It's not like you're buying or selling something. It's more to do with the fact that, there is an entity that is providing research as a service. There is an entity that is using that research, in the context of their decision making. Let's talk about sell side first. We keep seeing these reports: buy this stock, sell this stock, buy Infosys, sell Infosys, hold Infosys. All of those reports come out from broking houses, brokers, right? Brokers will come out with these reports because they are doing a research, but they're not selling this research. They are essentially selling the platform, which is the broking platform, right? If a fund manager has to buy 100,000 shares of Infosys, they will need a broking account. They will need a broking terminal, essentially. Which broker do they choose? You can choose the broker either based on execution capabilities, but you would assume that everybody in the market is looking at the same stock. So they'll be looking at the same price. You can look at brokers in terms of cost, but you would assume again that if it's a large buyer who's buying a lot of stock of Infosys, you would be offering the same terms. All brokers would be offering the same terms. So the third thing you can look at is how good a broker is with their research. This research that a broker is providing so as to ensure that a fund manager uses their broking platform for buying the stock is called sell side research. The sell side entity is providing research in order to, in a way, sell their broking service, right? That's your sell side research. Now, what we are talking about in terms of sell side research typically gets broken down into two parts. You will see institutional research and you will see retail research. Retail research basically applies to high net worth individuals who are managing their own portfolios. Institutional research goes to fund managers, right? A mutual fund manager or a hedge fund manager or a foreign institutional investor or an insurance fund manager. That's where institutional research will go. Obviously, institutional research is more rigorous because the clientele that is reading that is a more enhanced or sophisticated customer who has an understanding of financial markets much better than a retail investor has or an HNI investor has most of the times, right? On the buy side, you will find somebody who is actually transacting. This doesn't mean they're buying. They can buy, they can sell, they can hold, they can do whatever. But these are the guys who are actually transacting on the portfolio. These are the people who transact on the portfolio. So all your mutual funds, hedge funds, in India, what you call as alternative investment funds or PMS, portfolio management services, anybody who's buying a particular stock or creating a portfolio, doing some action on that, buying a stock, selling a stock, holding it in the portfolio is called a buy side. This will be all your mutual funds, fund managers that are there, correct? Examples of buy sides, you'll see ICICI Approved Mutual Fund, Kotak Mutual Fund, right? You can see life insurance entities that are there, other mutual funds that are there. There are close to about 50 mutual funds in India now, give or take a few. Broadly, a lot of licenses are in the process as well. And then sell side would be all the broking houses, domestic ones like Kotak Securities or Motilal Oswal, global ones like JP Morgan or Nomura, right? So that's the construct. The same entity can have both buy side and sell side. So you could have a Kotak mutual fund and you could have a Kotak institutional equities securities arm as well, which is coming out with the research reports. The mutual fund may or may not use Kotak securities. They may use them as one of the brokers that is there. They may choose to not use them as a broker, right? So these are two different sort of entities within the same blanket bank that is there. They don't necessarily need to interact with each other on transaction. For a sell side firm, the buy side firm would be a client like any other buy side firm, right? So that's the context of equity research. Now think about what is the skill set needed. Once again, you're investing in listed equities. You need to have a good understanding of markets. You need to have a good understanding of what equities are doing, what drives the stock prices. So you need to have a solid macro perspective. Remember here, almost all the information is public because you have annual reports. These are listed entities. They are mandated to kind of come up with reports. So industry and company analysis form the backbone once again. Valuation becomes a much more detailed exercise here because now you have data. You have a lot of information about these. Unlike, let's say, in investment banking, where you might be looking at some early stage firms, here you have a lot of data that is available. So you will form a broad understanding about how does valuation work. But once again, similar skill set is needed, right? You need to understand about the sectors. You need to understand about the company. You need to understand about the core valuation tenets that apply. Equity markets understanding is absolutely necessary. I think tools such as Excel become important here because you will be sort of creating a lot of models from time to time about companies, and those kind of frame the basic construct of what an equity research analyst does. Once again, lesser number of jobs as compared to the number of people who are vying for these jobs. So the skill set tends to be non-negotiable. You would want to have a very, very good understanding about how do you go about evaluating a company. You should understand about sectors. So if you're trying to build a career in any of these areas, even this or investment banking, you would want to have at least good expertise about one sector and one or two companies within that sector in India, right? If somebody asks you these questions, you should be able to answer those questions in a reasonable amount of detail. Brings us to the next side, which is credit research. Now, just like equity research is for stocks, listed stocks, if you're looking at giving somebody a loan, what you do is a credit research. Now, you can give a loan as a banker. You can give a loan as an investor who's buying bonds from some company, right? In both these cases, you will do credit research. It's an integral part of lending. When you're lending money to somebody, you have to kind of do credit research around that. This is either done by rating agencies. Globally, you would have heard the names of S&P, Moody's, Fitch, etc. In India, you will hear the names of guys like, CRISIL, ICRA, India Ratings, all subsidiaries of these global entities. Basically, these are the rating agencies that would rate any bond issuance that has happened. If a company goes to a bank to raise money, the bank will also do the same activity of rating this company in terms of, their parameters and saying, okay, what is the interest rate I should apply to this particular company that is applying for a loan at this point? Higher the risk, higher the interest rate you will kind of work with. Once again, you will note that if a company is coming to equity markets with an IPO, you're doing equity analysis. If the same company is going to a bank with a requirement of raising a debt, you are going to do credit research for them. So the skill set doesn't change. You will still need to know about the industry. You'll still need to know about financial statements of the company. But in the context of credit research, because the risk tends to be more, you're lending money and you don't want to take as much risk like an equity holder does. You want to be doubly sure that the company has both the ability to repay your money and willingness to repay your money. In these cases, your analysis of financial statements requires a much more deeper understanding. So while you'll still need an understanding of the industry, but financial statement analysis, which you're looking at, becomes a lot more advanced here. You'll try and use a lot of different kind of methods to figure out whether or not the company will be able to repay the money. You'll try and figure out, reading between the lines about what the company is stating, saying, are they telling the truth or not telling the truth? Because if you're lending money, this is usually money of depositors. There is a bigger, sort of risk at stake in that context. So you're very, very careful about who you're lending it to. You need to have an understanding of debt markets and how does the valuation of debt securities take place. So that becomes a core understanding topic as well. Excel continues to remain important because you'll do financial modeling here as well. So that's the construct of credit research that we look at, which brings us to the final component, careers in private equity or venture capital. Now, if you sort of look at this segment, this is early stage investing. When you're looking at investing life cycles, right, you can probably draw it down like this, where at the beginning of a company, you do what is called as seed funding. Usually the founder himself or herself would put money, family members would put money, friends would put money. At the seed level, it is actually something called as FFF, friends, families, and fools, because you don't have too much more information at this point of time. Once the company starts working, there's some understanding of the product and all, then you go to the second round called angel funding. These are called angels because they trust you before anybody else would trust you. So they give you some money. And then you start getting into what is called as venture capital, right? This is where the VC rounds will start. This is what you typically keep reading about series A, B, C in the newspapers, right? They can go on till series G, H, I, whatever, right? Then comes private equity. In the conventional sense, private equity follows venture capital. And if you were to go back a few years and look at what you mean by private equities would be the large guys like, let's say, KKR and all, who would do so huge investments like $400 million, $500 million, $1 billion. Those kind of investments are happening by private equity guys before the firm goes and does an IPO. Now, in the context of India, once again, this line of VC and PE has gotten a little bit blurred. One, because I think the size of deals in India is not very, very large. If you ignore companies like Reliance, who went about selling the stake of Jio to all these KKRs of the world, you'll probably not see such large deals happening most of the times. So you'll obviously scale that down a little bit. So there is a little degree of overlap between, what a VC fund does or a PE fund does. The way these funds work is they will take money from a bunch of investors and they will put that money in a certain chunk of startups typically, right? Startups across multiple stages. So the stages we can see in very simple sense, you'll probably see that, initial funding is seed funding. Angel funding usually is, somewhere, if you're looking at a country like India, you'll probably see, ranges about, 5 crore to 20 crore would be angel funding. VC funding would be, this range of 50 to 100 crore is typically what is called as VC funding. When you go to PE, this sort of usually goes beyond 200 crore, but that doesn't mean a VC fund can't do that, right? A VC fund might very well do that kind of investment as well, because it's not very large in that context, right? So that's something that you keep in mind. Now, these funds could be, again, sort of specific to certain domains. Only in fintech is where we invest, for example, or they could be consumer oriented. We're only investing in B2C businesses, for example, or there could be a bunch of, funds that are sort of sector agnostic. They could go and invest anywhere. Correct. So you'll come across all these investing. Early stage investing is what you will look at. You look at a lot of names here: Axel Partners, Sequoia, A91, True North, Matrix, India Quotient, Bloom Ventures. There are lots of these, right? That would be there. But this is a segment that does not necessarily recruit a lot of freshers, right? This is a very specialized role. And usually a lot of the people who move into these domains move either from investment banks, because when you are in an investment bank, a private equity fund or a VC fund could be a customer or client for you. They might be the ones who might be investing in a company that you are advising, right? So you move from investment banks to this. You also move from consulting to these. A lot of the times you'll see folks moving from consulting, like the Max and BCGs of the world, to some of these organizations over a period of time as they kind of build their career in PEVC as we go along, right? But very, very tricky field to get into because the openings don't necessarily come to, freshers in most campuses. Once in a while you'll find something, and consequently makes it even more difficult and sought after in that context, that you would want a very strong skill set if you're trying to apply there. In terms of skill set, this is a slightly more top level understanding. You need to know financial statements, but you need to have a good sense of, industry. And in this case, industry would also mean a lot of emerging trends that are coming out in the business, right? Because most of the times you're looking at new age startups and, something that is changing the trend. So your bet is as much about, whether the startup will be able to execute what they're going to execute. And in addition, you want to kind of try and find out, whether or not that trend will exist after a point. Will people keep sort of, buying a particular product or a service in future as well? That may not be, a very, just as a simple example, would people keep using Zepto for a 10-minute delivery in future? Right? What if they start charging money? Would people pay for it? So your understanding of that industry has to be very, very good in terms of what you think is going to happen, because here practically a mistake means you will lose all the money. Your exit is not very easy in a startup if you're not done the investment properly, right? So that's the construct that comes here. Once again, tools such as Excel are extremely important. PowerPoint skills are very necessary here because you're dealing with those day in, day out. But your primary skill set is the ability to decode the industry, the ability to understand that if a firm is making losses today, what will take it to profitability at some point of time in the future? Is the market size big enough? Is the company going to be able to execute this race to profitability if the market is big enough? And then you go specific to the sector and start applying valuation concepts, because your common methodologies around valuation, the likes of discounted cash flows or price to earnings ratios, these don't work because a lot of the times the companies don't have earnings or cash flows, right? They're losing money as you're starting. So you'll put some valuation on, specific metrics like valuation per subscriber or valuation per page hit or valuation per, if you're selling a particular set of units, then what is the units that are there? Or if you're looking at a Flipkart kind of an entity, then you're looking at valuation plus gross merchandise value. So you're looking at some of these parameters at that stage when you're looking at that data, right? So that's the construct of the PEVC segment. What are some of the common skills that we are looking at in these domains? So financial statement analysis is the bedrock of almost everything, right? If you can't decode a company's financials, you can never invest in it. You can never give a loan to it. You can't really look at raising funds for them. You can't defend any projections they're making. So whether we like it or not, financial statements is something that is going to stay everywhere across all these domains. Industry understanding is something that is super critical. Unfortunately, not taught in a very coherent manner in most courses, right? Uh, a lot of industry analysis that is taught is scattered. You learn a little bit of it in microeconomics, you learn a little bit of it in macroeconomics, you learn a bit in strategy, a bit in financial statements, a bit in behavioral investing, and so on and so forth. But it's not combined together to understand how does an industry function, right? So it's important to pick up those tenets and build a framework for analyzing. How do you go about analyzing an industry? Uh, Valuation is core to a lot of these domains, much more rigorous in, let's say, domains like equity valuation or investment banking than some of the other domains. Understanding of markets, that's sort of necessary. And yes, of course, I can't emphasize enough, an understanding of Excel is needed. That doesn't mean you know all sorts of fancy functions in Excel, but you should be reasonably good, well equipped to kind of be working quickly and seamlessly in Excel in that context, right? So that's in a nutshell, some of the bunch of common skills that are needed across all of these domains that we've talked about in the context of the financial services.